you had sent me an updated financial spreadsheet, so I went ahead and just wrote the original numbers that we were working with when we first spoke, and then the numbers that you submitted recently. So you're saying that you could make anywhere probably as little as the 10,016.85. That's like would be like a low month. That's correct?
That's correct.
Okay, cool. And like a steady, like consistent is the 10,516.85.
10,016, yes.
Okay. Yeah, because when I saw the cash, I was like, oh shoot, $66. What happened? So I just wanted to make sure. So it can range between as low as $66 as high as the 561.
Right.
Okay. So I'm gonna use the lowest number, even though you have higher months, right? So I'm gonna use the lower number of the $66, and let's see what I want to do. And I'll use that 950.85 expense number. And I know that, even though there's months where expenses go a little bit higher, and when that does, typically you're also making a little bit more money in that month, right? All right, so the second position HELOC, you had wrote, so now we're currently at $39,932.76 owed, and the payments set up by the bank is $486 a month. And we're not allowed to pay off the full balance before the 1.99 expires. Is that correct?
I don't know. When I initially was smaller amount, I had paid it. There was no, I paid it off. There was no problem. Not that I saw.
Okay.
There was no prepayment penalty on that.
Just making sure. I think I was talking with. I've had other clients with HELOCs. They get an introductory rate. And sometimes the bank says, all right, you have to maintain or keep a balance of 25,000, let's just say, on the HELOC.
Oh, no.
Okay, cool.
No,
so
the only thing I verified with them was that number I told you, just 1 year in the 1.9. I called them, and that was incorrect. 1 year until
1.99 until
January of 9.
Really?
That's what I said. I will call and re-verify with somebody
else. Please do that, because that I would love for that to be true. I just don't see how. But okay, yeah, so we'll definitely verify on that, because that right there is a fantastic opportunity. And which bank is this again? Space Coast Credit Union. Okay. Space Coast Credit Union. Yeah, and they're in multiple states, if I'm not mistaken. They're in Florida. I know that. You're in Florida too, right?
Right.
Yeah. So I think they might be in multiple states. So we'll definitely have to double check that. So for now, we'll just keep it at the 1.99, because I know for sure it's at 1.99 for at least a year. That I know. Now, at this point, when we last spoke, we were talking about like moving all the income into the HELOC, right? Banking at one location. Where are we at with that?
I changed the direct deposit, so that is now going into checking account to the HELOC, so that's at the same thing. I did order a debit card through Space Coast, so that's going to be coming. And I ordered checks just in case I need to write checks, so that's all through that account. So I pretty much have taken all the expenses, everything that's usually deducted from my Wells Fargo account. I've moved it over to Space Coast, except for one or two things I still need to contact the company about. And so I'm trying now, everything is going to be run through. The only thing is I still have my credit card with Truist, which is just a bank-to-bank transfer. I can, pay that.
Yeah, no issue there.
Space Coast online.
That's this card right here, right?
Yes.
Now, is this a debt, or is this all the bills that you've been running through that credit card?
That's all the bills I'm running through that credit card. If I go out to eat, if I some of it is like the maintenance in my pool, and it comes through there. So anything that I could pay with a credit card comes through that credit card, and also gas, supermarket, everything goes, because I use that card primarily just for the cash rewards and all that. But I primarily use that card. Okay,
and the balance gets paid off each and every month. You're not actually paying this 17.74%.
That's correct. If I went through, because I might not get it all, but usually, because I went through and I looked at the statement, it tells you how much interest you paid up to, year to date, and I paid probably like $100 or $120 since January on this card. So for the most part, it is paid off.
Okay.
It's just, I think with summertime, my daughter's had a lot of camps and things like that. I just kind of racked it up a little bit, but usually it's all paid off by the end of the month. Gotcha.
You wrote in the spreadsheet, bills that can be paid with a credit card was only $1,796.90, but I'm assuming that number is probably much more than that because of what your balance is.
I just took that from on my expenses page. I took it from this page, basically the credit card. All your ones that I put the Y. That's what it is. I'm sorry. All the ones with Y's, the Y on it. Those are the ones can be with credit card. So I'll go on some I either have to do cash or I can pay it from that checking account.
Right, but I'm assuming the number is more. What you're actually running through the credit card is more because of the balance that you have here, the $6,600.
Right. That, like I said, I think it's just more summertime things. Like my daughter had camp for a weekend with $400 for that 1 week.
Okay.
So it's generally, the balance generally not that, but like I said, I think it's just more the summertime. It's generally not, it's never been
that high. It's not, okay. So it's usually not that high.
No, because I'm usually able to pay it off. Yeah, that's correct. I'm usually able to pay it off every month. It's just, I think with summertime, and I bought my mother a fridge. I think that was $1,000 at Brand Mart. That type of thing. So it's definitely not that.
Okay, so that means that some of it is actually debt and some of it is bills. So with that, we owe $39 on the HELOC. We have $150,000 of that's my max credit limit, so times that by 2/3. So my chunk max amount, I really should never penetrate more than $99,000. I already owe $39, so I've already used quite a bit, but I'm in this scenario here, a great start in terms of redirecting cash flow, because we're accounting for it right there. We could absolutely move that 66 and even that student loan and reroute the 5, the 9322, and I remove 4.25, I remove 17.74, whatever I was paying in interest, although wasn't a lot, but still I moved that all into the HELOC, and it's going to be less, and now I recover that 593.22, and now that becomes 100% principal. Now that you're moving all your income, all the bills are going to be coming out of the HELOC, right? Even the credit card statement bill, when it's due, you'd be pulling it out of the HELOC into the checking, boom, pays the credit card in full each and every month. So the 486 that we were accounting for also becomes cash flow, and 100% or near 100% of that number also becomes principal. So now I have the 486, the 593.22, and I'm still going to use that lower number of the $66. So money that would stay in the HELOC is going to be as little as the $1,145.22. And I could take that number, the $1,145, and I could add another, $450, let's just say. Very conservative. Like, you could be cash flowing a little bit more than that number, 15, when you have these months where you're actually, you bring in the 10.5 and you spend that number, but now that number is less. So if I was to take the, because I was going off that expense number, $9,950.85 minus $468 minus $93.22 minus the 500, right? And did I minus the 486 already?
Yeah.
Okay, let me do that again. So 9,950, 85 minus 9322 minus 500 minus 46. Yeah, so my amount of money on average that should come out of the HELOC should be about 8,871.63 moving forward, right? So I'm gonna assume that we're in August. Although we're recording, we're here towards the end of July. So I know you're gonna have cash flow for July, whatever money is in your account for July, and that's gonna start getting pushed into the HELOC. But I'm gonna run these numbers based off of August. Like if we were starting in August, right, with that number owed, and then I'll show the cash flow, what it would look like by the end of the month, right? Using that number of expense and using the cash flow number as well. So
starting August 1st, I won't have that. We'll pay off that. Okay, go in and pay the student loan and that credit card from the HELOC. That gets care of by August 1st.
Yeah. So we're gonna do it now, but I'm just creating this this buffer, right? Where I'm gonna assume you did it on August 1st, where in reality we can go. Yeah, we're gonna go do this today, pretty much. You're gonna pay off that credit card, pay off that student loan, get that cash flow, get those savings. Just creating a bunch of buffers here. And what's gonna end up happening is you're gonna go faster than what we illustrate, and that's really gonna build up a lot of momentum for you. And worst case scenario, if we did according to what we illustrate, it's also really good. And that just meant that maybe something came up, life came up, an emergency. So we're setting realistic expectations, right? That's the main thing here. All right, so 39,932.76 minus income over a 30-day period is the 10,016.85. So balance would have gone down to as low as 29,915.91. Add expenses. Now that the payment on the HELOC is removed because my income is the payment, and then these debts are now gone. So add expenses of 8,871.63. Balance should end somewhere around 38,787.54. And oh wait, made a mistake because I didn't add those balances. So let me do that. Let's go back. 39,932.76 plus 4,530.47 plus 6,692.98. So we're actually at 51,000. Yeah. So all the other numbers are still correct. I just forgot to add the balance. So we're really starting here. This is my highest balance. Minus income, 10,016.85. Add expenses, we're around here. Perfect. So now we have to calculate our borrowing costs, see what we're working with. And do you know what the cashback rewards is on that card? The percentage? Yeah, no, just the percentage. Like what, for every, transaction, what do they give you? 1%, 2%?
I don't know.
Okay, that's okay. So, but we know we're getting something. Yeah. So I'll just assume 1%, right? For now. And then you'll correct me later what that actual amount is. So I'm going to take the daily borrowing costs of these three numbers, the highest balance, lowest balance, ending balance, to get the median number, right? To try and estimate what our borrowing cost is in 1 month. And that number, the number that I get, is also an overestimation because it's assuming that you would owe $51,156.21 for 10 days. That's not true because you're immediately dumping your income in, so that balance is you're never really owing 51. And then also assumes that you would owe 41 for 10 days. That's not true because money's coming out as money's going in. And then it would assume that you owe $50,010.99 for 10 days. And that's also not true. But gives us this healthy number to look at where we say, okay, this is likely what I'll pay. You know, it's going to be off by maybe 10 bucks, 15 bucks or so, nothing crazy. So that's $2.24, 51,156, 21 times 1.99% divided by 365 days, $2.78. Add the 3 up, 774, and then divide by 3. Daily borrowing cost $2.58 a day times 30 days, $77.49 for owing this amount of money, $51,000 being the highest balance. See how insanely cheap it is to use this particular HELOC, especially with that introductory rate. It's fantastic. So $77.49, then take that number, $1,796.90. I'll just times it by just 1% cashback rewards. Call it 18 bucks. You help reduce the borrowing costs by $18 just from cashback rewards. So that's what I end up paying, $59.49. I'll do this one more time. Go ahead.
Now, with that cashback reward, now, how do I take care of reducing that? Do I just take that money and turn on and pay the credit card with that cash, or send it back to the credit card?
Yeah, so every month you would take that $18 in earnings, let's say, and it would just be statement credit to the credit card. So in the month of August, I run $1,796.90 of bills through the credit card. End of the month, I see that cashback rewards earnings because it's instant as it occurs. By the due date, so I ran all those bills in August, September, I'll owe that amount, and I'll apply $18 of statement credit, which means 18 less dollars are coming out of the HELOC.
Okay, I see. Okay.
And that $18 helps with what I actually pay in borrowing costs.
I got you.
Right?
Okay.
Little, but over the months, it makes a huge difference, where what usually happens is between months 4 to 6, 6 to 9, you're no longer really paying any interest. So you're still going to get charged, say this number, you're still going to get charged that number to the HELOC, right? Somewhere around this number. HELOC, they're going to take from the bank, they're going to charge you that interest. Okay, no big deal. But what happens is you'll see the cash back and you'll say, oh, that's my recovery. That's my offsetting effect that's occurring. And then month to month, you're going to notice this number drops. It's going to keep dropping to the point where you're really not paying anything anymore, because the cashback rewards helps you go to like a net zero borrowing cost. And then that'll be the next indication that we should be getting ready to make our next chunk towards the next debt. Right? And as long as we were paying at 1.99 is less than every single rate here. So I don't even need to run the debt snowball to determine whether velocity banking makes sense, because just by looking at debt consolidation, moving 4.25 to 1.99, 2.63 to 1.99, there is no cost, there's no application origination fees, there's no cost to move the money, no balance transfer cost, nothing. So just that alone, and then the fact that now all my money squished together is so powerful that even on 50K owed, right, balance owed 50K, it don't cost me nothing.
Right, okay.
Pretty powerful stuff. So I'm gonna go ahead and run another month, right? So I'm gonna take that $77.49 and add it to the 50,000, $10.99. So this is what I'll actually owe. Somewhere around here, end of August would be my balance. So now September, same thing. Income goes in, 10,000, 16, 85, 40,000, 71. Add expenses, 8,000, 871, 48, 943, 26 times 1.99%, divide by 365. $2.66. Notice how it went from 272, now it's 266, right? 40,000, 07163 times 1.99, divide by 365. $2.18 from 224. Cool. 50,088, 48 times the interest rate, 273. We'll go like this. 273 from 278. Add these three up. Do it one more time. $7.57 divided by 3. $2.52 from 258. Borrowing costs drop by 6 cents per day. What does that result in? $75.70. That's about a $2 or so drop in borrowing costs for that month, right? And again, the number is going to actually be less because the way your checks are coming in and whatnot. But over estimation, minus $18 again, $7.70, right? Not bad at all. So we want to do this for we want to do velocity banking now for about 6 to 9 months, just on that balance of the 51, right? We want to drop that down. You're gonna most likely go faster because you're gonna have months where you make that 10.5. And let me ask, are there months where you make more than 10,500?
No.
Or is that the highest?
No, I mean my mother will give me money, sometimes like thousands or so. There will be, but it's not definitely at there.
Okay.
So there will be.
Okay. The other unique. Okay. The other unique thing that you can do here is if you have any savings at all, emergency funds, sinking funds, you can move those dollars and park it in the HELOC, right? Let's just say you had $5,000 in sinking funds or emergency fund, right? You could park it in the HELOC, and what would happen is as my balance starts to go down, once it reaches in the neighborhood around 5K, that's my new zero, right? Because that of those dollars there, right? That are just parked, and I'm never really gonna use it, only if I need it, emergency. And even then, if an emergency ever does happen, before I pull cash, I would want to run it through the credit card if I can. Cashback rewards, it buys me time, right, to gather up the money, pay that card off in full before the due date, pay nothing in interest. So that's another way to kind of speed up the process a bit. If there's opportunities in your life to bring in more income, that's obviously going to speed this up. As it relates to how you spend money, I don't really beat people up with how they spend money unless it's like really close. Like you can obviously see here would be a situation where it's really close, but still I'm not going to beat you up on it, but I am going to say, hey, something to maybe spend a little time on to say, okay, am I wasting money anywhere, or all these dollars have a purpose? There's really no rerouting, because at the end of the day, you can only cut off so many bills until you're getting into that lifestyle of frugality and minimalism, which I have nothing against, right? So if that was a thing or something you want to venture into, there's some pretty cool channels that they dive so deep into it where you could probably recover at least $500, right? Probably more than that.
Okay.
And it would be in my opinion, it would be a temporary shift. Unless you absolutely love that lifestyle, then go for it, because it's only gonna make your money look better, right? So I just leave that up to the client, total, personal preference. My answer to expense and income being so close to each other, my answer is usually always the top number. How can I just increase that number and maintain my lifestyle, not increase it just because my money goes up? But how do I maintain my lifestyle while simultaneously increasing that income? And now I no longer have a worry. Clear on that?
Yeah, I forgot. I did stop my. I forgot it will go up. I stopped contribution to my 401k last week, so that is going to increase by 4. Gosh, what is it? 207. I think it was 207 a paycheck, so maybe 414 a month. So the income should increase, $414 about that per month. I forgot about that.
I won't even factor that in because we already went so deep.
Mm-hmm. The extra, right.
But hey,
I haven't gotten it yet. I mean, probably haven't even processed it yet, but that will increase, so that would be extra.
Yeah, so you're gonna be somewhere more around 1,900, almost $2,000. And again, you're gonna be flying. You're gonna be making my numbers look like nothing. So that is really really cool, really effective. The other thing I would pay attention to is your what is it called, the W-4, your allowances, whatever that number is. Maybe sit down with a CPA and be like, look, I don't want to owe the IRS anything at the end of the year, and I don't want the IRS to owe me anything at the end of the year. I do not want a refund. And so when you tell your CPA that, what happens is you actually keep more of your paycheck throughout the whole entire year, as opposed to receiving a refund, which simply means that you overpaid the IRS throughout that year, and they didn't give you any interest earnings on your dollars. It just sat in an account, did nothing, right? And they're giving you a portion of that money back, and then you still have to pay filing fees with the tax accountant, you know? So
now, when do I go through and change that though? Is that, I mean, so do I call, when am I able to make the change on this?
Oh, that,
or whatever, W2, whatever.
That could be done immediately. So I could go to my, HR department, get those documents, go to the CPA, have that conversation, be like, look, I don't want to owe the IRS anything at the end of the year. I don't want the IRS to owe me anything at the end of the year. How do we schedule the allowances, that number, instead of putting a 0 or a 1, it needs to be more like maybe 6, 7, 8, 9, so that I keep more of my paycheck throughout the entire year. And that's a cash flow increase, where now those dollars, instead of it sitting in an account doing nothing, earning nothing, where you don't have access to it because it's sitting over at the IRS department, now it's sitting in your bank account, which you now move into your HELOC. And now you're actually recovering interest and cash flow savings.
Okay.
So that's a little action step. Take a little note there. That's something we can absolutely recover. The other thing I was going to ask regarding your mortgage, can you tell me, is this a 30-year fixed traditional, or is it FHA?
No, it's a 15.
Oh, it's a 15. Okay.
No, it's a 15-year fixed.
Is there private mortgage insurance? I'm not sure if that applies on 15 years.
No.
Okay, cool.
No, I don't have a payment.
Is escrow included in that 361933?
Yes, it is. Yes, it is.
Another way to maximize all my dollars here is you could have, potentially, you can remove escrow from the payment, right? And whatever the escrow is per year, you could just pay that yourself on an annual basis when it's due. So therefore, the money that you pay right now on a monthly basis, again, it's money that sits in account, doesn't do anything, it's not earning any interest, and then it just gets pulled from that escrow to pay the taxes, right, on the property. So if I could remove it, well, now the payment goes down, right? My mortgage payment goes down, which means more money stays in the HELOC, reducing that borrowing cost. So there's a gain there. And then when the bill is due, I pull it out of the HELOC, pay my escrow, done. Right? You're now responsible for it rather than them taking care of it. And who knows, maybe there's even a fee for having it come out monthly. So you'd be saving on that as well.
Right.
So little action step right there, something to just mark, say, okay, we're going to look into that, Can it be done? Call my mortgage company. Hey, is this possible? Can I remove escrow? And I just pay it individual. I've had tons of clients do that. And there is a recovery of interest savings throughout the year. Every dollar counts, okay? So all these little knick-knack, right? All these little knick-knack things really start to add up and expedite this whole process.
Okay.
And we're also going to commit to doing velocity banking for about 6 to 9 months. So by the end of this year, December would be technically 6 months. So between December and February, March, we'll see what did the balance go down to on the HELOC. What could we chunk at next? Right? What's our next thing we want to go after? Right? In the debt snowball world, this would be the next option. The student loan, right? The lowest balance there. Right? These are private loans, right?
Just a question. Yes.
Yeah, they're all private. Go ahead. What's your question?
Just on so I can do my own calculations. Back on the 6 to 9 months. Tell me the amount that would be coming out. So when I calculate it out, I can see what it looks like every month, because I kind of want to see that go down. How much is going into the HELOC? How much is coming out each month? So I can calculate that. Just what the number, like from the 40 to 48,943. How much for October? What's going in and coming out? What are the numbers that you're using? So I can calculate it every month.
Okay, so I'm using the $10,016.85 money going in, and I'm using the $8,871.63 money coming out each and every month.
Coming out, okay.
And that is super conservative, right? Because you obviously are going to be netting more, and after you do all those other little steps, we're going to be probably 2K plus in cash flow. So you're going to be looking real good.
Okay.
So I'm just going off this little number, where it's nearly the reality number is probably going to be double, right? So this would have been September, $48,943.26. Add the $75 in interest. Now what I'm going to do is just go a little bit quicker now and just take that $48,943.26 plus $75, 70 cents. And now I'm just going to start minusing income, adding expenses. I'm just going to write the months, what that balance ends up looking like. So $49,018.96 minus income, $10,016.85 plus expenses. So October, we're at 47,873.74. And then I'll just go ahead and for November, just to see what it would look like, I'll use a $1,900 number because I know I'm getting 414, so I'll do 1145.22 plus 414. That actually that 414 might be a little less. I forget how it works, because you're deferring that income, right? So when you file, you're we might put ourselves in a higher tax bracket, so we would want to see what that kind of nets out to. So I'm just gonna go, what else did we say that we recaptured? The 414, the actual cash flow, escrow here, the allowance thing that can recover more. Yeah, so I'd be comfortable saying $1,900. So I'll add 10,016.85. I'll add just $700 to the top number. So we could go from so I can use that number instead. Expenses stay the same, right? The expense number never changes with any of the things that we shifted. It results in a higher net take-home number. With the 401k, do you know how much you've accumulated in that account?
It's 80. Well, it's true. I have $83,115.43.
Down the line, that can also be a tool that we could leverage. But that account probably needs to grow a little bit more. There's some restrictions as to how much they let you leverage against for a line of credit, but that is a potential possibility there. All right, so we're gonna do 47,873 minus income plus expenses. $46. Let's do December. So December we're at 44. At that point, if our balance is somewhere around 44K, I would say let's keep going to about maybe that 9th month. Try to get it back down to that 39, and it'll probably make the next chunk there. We'll also evaluate, is there an opportunity in the marketplace for you to make more money? We'll also just evaluate, okay, do we still want to keep paying off debt? Has our goals shifted, right? We'll have those checkups just to ensure, because plans change all the time. Let me tell you, I've worked with hundreds, if not thousands of people at this point, and we set out for an initial goal, and then either God tells them something or they just feel it in their heart to be pulled in a different direction, different opportunity, and they now feel more in control of all the debt that they do have, their numbers, their cash flow, their expenses. They've got a really good reading on everything, that they're like, okay, I'm cool with having this debt, because there's an opportunity that just presented itself where I could probably take my income from 10 and bring it up to 15, right? And so I like to just be aware of that and just provide that awareness to you, that if something like that were to occur, I would highly consider it, especially if it's like a no-brainer, because the more money I can bring in, that is the fastest way to get out of debt, is to simply generate more income while maintaining your lifestyle. That is the fastest, with nothing that beats that, right? And then when you factor in velocity banking, velocity banking just really speeds everything up. So
I try to me, because I want to take care of my daughter, but I don't do many things like outside of my home or anything, because I just can't pick her up and do everything with her. So I'm definitely going to start or interested. And I think you sent an email just today or yesterday about the Alex somebody.
About the
Alex Alderan.
Yep. With his he's got a new service about helping people start e-commerce, Shopify, Amazon stores, Walmart stores. Things that may there's opportunities that require capital up front. So that would be one of them that requires capital, money, resources. And then there's other opportunities where it doesn't require capital, but it may require more of your time. So, you know, we want to factor into those things. When I'm working with career people that have been doing something for a consistent amount of time, I like to challenge them on, okay, within that industry that you already have experience, you went to school for it, got your degrees, you got, you know, title, experience, all that good stuff. Is there a possibility within that industry to generate more income within the hours that you're already working at that location? Is there an opportunity to generate more income, like taking on a second task that doesn't deviate or from your main work? Then there's obviously the opportunity of promotion. I can't tell you how many moms I talk to that they've been working at a corporation or a small business, in the hospital. They've been working at a place for 5 years, 10 years, 12 years. And I'll ask them, when's the last time you got a raise? And I've heard moms tell me 5 years ago, 7 years ago, 10 years ago. I'm like, what? Like every single year, at the very least, my income should be increasing, because inflation alone increases every year by like 3, 4, 5%. But over the last 2 years, inflation has gone up 10, 15, nearly 20% since COVID. So that's why it's so important to just be mindful of that. A lot of my moms forget. They don't ask. And, you know, just to remind, hey, you're worthy. You're worthy of that increase. So ask for it. You deserve it. They can put it within the budget, especially if you're with a Fortune 500, 1,000, you know, company generating billions of dollars. Yeah, let's just make sure with HR, I'm constantly being evaluated for a promotion every 6 months, year, whatever it is. Little things like that, you know, helps big time. So January, we're at 42. Minus income. Plus expenses. February, I'm at 40,000, 492.86. And by March, we're gonna be below 39. So I would say around that point in time is when we would say, okay, what do we want to do? Do we want to make a chunk of 10, 20, 30 grand towards debt? Or now that you've been doing Velocity Banking for 6 to 9 months, you've gotten results, you've beat Denzel's numbers, everything's under control, you feel confident. Do we want to take 10 grand, 5 grand, and maybe work with Alex to build an Amazon store that could generate an extra $1,000, $2,000 per month within 6 to 9 months, right? And then you're like, oh, so if I pull 10, make an investment in a business opportunity, and it generates an extra $500, an extra $1,000 within 6 to 9 months, well, I could just keep doing Velocity Banking on that 10. Notice how long it took me. Notice how long it took me to bring the 60 to 4. So that's 10, 11K, right? Brought it all the way up. So from 51 to say 38. What is that? 51,156.21 minus 38 grand. That's 13,000. So it took me 6 to 9 months to pay down $13,000+ of debt. All right. In this case, 9 months. to bring down 13 grand. So I could say to myself, all right, if I invested 13 grand or less, brings the balance right back up to here, that 51 number. I'm not over leveraged by any means, right? 99 is my max number. We don't even need to go anywhere near that, right? No point. And I say, okay, 13 grand, what could I do with this? All right, maybe I want to work with Alex, or maybe there's an opportunity in the organization company you work at for promotion or increase, or some kind of skill that you have on the side that you could engage with.
Okay.
But you know what I mean? We could just go through the whole list. Look at your skills, talents, characters, gifts, right? And then we know that if my income stood the same, cash flow stood the same, it would take me 9 months or less to bring down that 13 grand, no matter what, right? Numbers stay the same. Okay, cool. And so you would make that decision. 2023 March, we would want to check in with each other. Or I'd say before March.
Okay.
So you put that in your notes. Before March, let's check in with each other, see how things are going. And then within this 6 to 9 months, probably by December, and even the months prior, just, email back and forth. Hey, how's it going? How are the numbers looking? Did it go according to plan? Is it not going according to plan? Good stuff?
Perfect.
Awesome. Any questions?
That'd be perfect. No, I just now I know where to start. And then once I get the ball rolling, now that I've kind of narrowed everything down to the one bank, it's going to be much easier. So once I get that rhythm and flow as to what's coming out and how it's coming out. Oh, the other question I just have is, I know sometimes you talked about you make a payment between like the first and the fifth of the month, or the last 5 days of the month. Is there anything specific on that?
So that has to do with the credit card I think you're referring to.
Oh.
Yeah, when it comes to money going into the HELOC, the day you get paid, all of it needs to go into the HELOC, right? So you get paid twice a month,
okay.
Correct?
Twice, that's correct.
Right. So only 2 times money is going into the HELOC. 2 times a month. That's it. Now, money coming out of the HELOC could happen about maybe 3 to 5 times a month, maybe more. The way you bring that number down or increase it, right? So we'll do with the lowest amount of times would mean every 3 to 5 days from money going in, right? You would say, okay, over the next 3 to 5 days, how much money am I gonna spend that can't be paid with a credit card? That would be these payments,
okay.
Right? Mortgage payments, student loan payments, and water bill, gas bill, whatever, anything that can't be paid with a credit card every 3 to 5 days. This way you never overdraft on your checking account. We don't incur any unnecessary fees, right? Now, if you wanted to be so tedious because you know how important it is to keep as much money in the HELOC as possible, you could be taking money out the day before a bill is due, and just that amount, maybe a little buffer.
Right. Okay.
The problem with that is you've got to be very, very on top of your game. What if one day you wake up late, you forget to withdraw money, boom, now you're overdrafted on your checking account.
Right.
So to keep it safe, money goes into the HELOC. After money went in, you're making an immediate transfer out of, say, a $500 or the $3,000, $3,600 for the mortgage, made an extra $400, right? So you pull out $4,000. That'll last you 3 to 5 days. Then you pull out another 2, then another 1, right? And that's the cycle every 3 to 5 days. Now, in regards to the credit card, you probably heard that video where I talked about the 15 3-day rule.
Yeah.
Now, that applies when we're really not doing velocity banking and we're trying to build our credit so that we can get the line of credit so that we can do velocity banking. Once you're doing velocity banking, most of the time we're not applying for anything. So we could care less what's happening to our credit score, right? Credit score is going to be going up and down, up and down, up and down, up and down, but it's going to go up more than it goes down over the long haul of velocity banking.
Okay.
Right? So if you're like, Denzel, I want to apply for something, I want to get a new car, I want to get another property, then we would say, okay, maybe we put velocity banking on halt a little bit, maybe talk to a credit repair expert and get their opinion, right? And see, should I be doing this before applying for a mortgage? And usually the answer is no. There's too much fluctuation going on. Banks don't want to see all that. Plus, you've got no money in your checking account. Everything's in the HELOC. So they want to see money in a savings or checking account, right? And sometimes that can, mess things up. So, we're just aware of that.
So it would be better once I get rich, it would be better for me to just buy a car in cash.
Well, I personally, I lease my vehicles. I have no desire to drop money on a car that I don't plan on keeping forever. You know what I mean? So like the only car I would pay cash for is a G-Wagon, because that's like my favorite car, and I would own it and I'd keep it forever, right? And I'd maintain it and stuff. But right now I drive a Hyundai Tucson 2022. I'm on a 3-year lease. When it's over, I could go to a third-party dealership and sell my rights to buy the residual value of that vehicle to a third party, and they can give me cash, right? So think of like an off lease only, right? I go to them, I say, hey, my lease is up next month or 2 months from now. The residual value is X. Only I can buy that car at the residual value. Nobody else can. If I was to turn the car back into the original dealer at Hyundai, Coconut Creek Hyundai, right? If I was to give it back to them, they could then resell the car at a much higher amount than the residual value.
Right.
But so if I go to a third party and say, hey, I'll give you my rights to buy the residual value of this car. You pay me a couple grand. Guess what? Now I have a couple grand. I can go back to Hyundai and they can give me a brand new, I get another brand new Hyundai lease.
Right.
It ain't cost me nothing. And then when you factor in tax deductions on the lease payments, the maintenance, the gas, the insurance, because it's a business vehicle, then it's like, yeah, I would never drop 30, 50, 60 grand on any vehicle. Yeah, on the only vehicle, like I said, I would pay cash or leverage for would be like an exotic vehicle that actually appreciates in value, or my favorite car.
So I am in the market for a car, but it's gonna be, I'm buying an electronic vehicle, but it's not, the build is a year, so I won't have it, I won't go buy it today.
Yeah.
Type of thing. So I've even gone in, I spoke to the guy at the dealership, so I have to actually build the car, and then they're gonna make it in Germany, and then it'll take me 9-12 months to actually get the vehicle. So we'll definitely need to know what to do with that.
I'm assuming that's a Tesla?
No. This I can't stand the way it looks. It's gonna be the Audi e-tron.
Okay, gotcha. So it's gonna take, you say, like 9 to 12 months just to get the car.
Right.
Gotcha. Yeah, and if I'm not mistaken, like I know my business partner, Alex, he's got a Tesla. His car is now worth more than what he paid cash.
Right.
Cash, and he paid cash for that, and it's an asset that he can depreciate, and it's actually, he could sell it for more than what he got it for, so that's great. Not sure if that works the same with the Audi.
I don't know. I mean, I know for sure with the Tesla can sell it higher than what you paid for it. But.
Gotcha. Either way, whichever you do, if you lease, then there's no intent to try to pay the lease off early. It wouldn't make sense because there's no interest being charged. If you finance, we've got the strategy to wipe that out if that's the desire. You could look at, okay, I can borrow at 1.99 simple interest. I go to the dealer. The car is, how much do you think the car is going to be, the electronic vehicle?
It's probably going to be 80 grand. It's probably going to be 70 grand.
Right. So 70 grand, right? Or say 80, with all the bells and whistles and stuff, taxes, all that good. So let's say it's 80 grand. Whatever it costs to finance from that dealer, we would compare whatever the rate is to the rate that you have, the 1.99. So if they give you an amortized 3%, 4%, I
Right.
would just pull from my HELOC and pay
Right.
the thing in one shot, and then finance the vehicle through my HELOC and pay it off much faster.
Right.
Right. That's one option. Other option is a
So
lease.
would I look into like a lease option?
A lease option would be an option if you do not desire to throw $80,000 of debt to a vehicle.
I do not do that.
You know what I mean? So I know in my brain I can't make sense of that.
Right.
If I stepped in your shoes, I'm like, yeah, can't make sense of that. I would rather just lease that vehicle if possible for a period of 2 to 3 years, get my income up, right? Increase my income tremendously. 2-3 years later from now, I'm now doubling my income. I could then go and buy that vehicle out for the residual value myself and own it if I love the car and I want to keep it forever, or get the updated version of that. Yeah, 3 years later, because you've got the money and you treat yourself.
That makes
You know?
sense. That makes sense.
Cool.